Hey everyone, welcome back to Chip Stock Investor. We've got a special guest with us today to talk about a very special situation. Ryan Henderson, welcome to Chip Stock Investor.
Thanks, Nick. I'm excited to do this one. I think it's kind of an interesting situation, if you want to call it that, and I've enjoyed a lot of your videos, so I'm excited to be on.
Well, excited to have you here. This is an interesting situation that we've discussed on here before, but interested to get your take. Before we do that, though, everyone, check Ryan out. He is the co-host of the podcast Chit Chat Money. You can find that on Spotify, on Apple, or wherever you get your podcast. So be sure to check that out. Ryan, let's talk about Silicon Motion, ticker symbol SIMO. Before continuing, let me remind you to hit the like button and subscribe to the channel if this video is helpful as you do your own investment research and increase your knowledge of business and technology. We really appreciate the support, as subscribing to the channel helps us continue putting out content like this. So a couple months ago now, probably, I briefly covered Silicon Motion getting acquired, in process of possibly getting acquired by fellow chip designer MaxLinear. Silicon Motion specifically designs NAND flash memory controllers. So NAND flash, found in tablets and smartphones and PCs, has kind of replaced hard disk drives. Remember back in the day, memory used to be written on a big clunky actual physical device. It was noisy. Now it's just like a semiconductor device that memory gets stored on. And there has to be a controller. You kind of think of it as like a gatekeeper, or maybe like even a traffic light that kind of like dictates when the memory, maybe it's a photo, for example, on your smartphone, leaves the memory and gets displayed on the screen. Or incoming data comes in and gets stored on the memory device. So that's what Silicon Motion designs. But let's specifically talk about what's going on with Silicon Motion, because MaxLinear has an offer on the table for Silicon Motion shareholders. What's the offer, Ryan?
Yeah, I'll just kind of walk through the specifics of the deal. So on May 5th of 2022, so a little over a year ago now, MaxLinear announced that it was planning to acquire Silicon Motion. The terms of the deal are that every Silicon Motion shareholder will receive $93.54 in cash and 0.388 shares of MaxLinear stock. I think that it changes every day, but that's around like $13 or $14, an additional $13 or $14 in value for the Silicon Motion shareholders, if the deal closes. And so at the time, Silicon Motion shares were trading at about $81 when the deal was announced. Today, if I'm not mistaken, they're about $65, so they've come down. And here are kind of the events that have happened since. So obviously, May 5th, day of the acquisition was announced. July 6th, MaxLinear made a simplified filing with China's regulatory body. So it needs approval from Chinese regulators. The abbreviation for the acronym for their regulatory body is SAMR. I'm blanking on the full name, but I'm sure I could find it. And so they need approval for that. And so they made a simplified filing, which was a little bold from what I understand. Not a lot of those are accepted. And basically they got pushed back from SAMR and said, please refile the deal under the normal procedure. And so they did that. But at the same time, Silicon Motion shareholders approved the deal. So they got approval from Silicon Motion shareholders. And then on October 21st, so kind of while this deal was proceeding, U.S. announced a number of export controls on semiconductors to China. A lot of people were probably familiar with this in the semiconductor space, but tensions between China and the U.S. are not new over semiconductors. I think this has been going on for a long time. If you've read the book, The Chip War, it lays it out in pretty good detail how long the tensions have been going on. But this is maybe seen as sort of an escalation on these export controls. However, a couple days later, November 1st, MaxLinear's application for Silicon Motion filing was said to be accepted by SAMR. Basically, they've approved the deal to look over, so it isn't the deal necessarily isn't approved, but they're approving to review it. And maybe let me share, I guess, what the spread looks like right now. And so, just in terms of like context of where we are. It's been, I want to say 140 days since the deal was, the SAMR began to look into the deal. A number of management teams, so both MaxLinear's, Silicon Motion's, have said that everything seems to be proceeding normally. And there's actually the SK Hynix CEO, which I believe is a competitor to Silicon Motion in some ways, just had was at some sort of a conference and basically said what he's seen is that rumors are the deal is proceeding normally and should go through. And so I'll talk about the spread here, and I've kind of just laid out some simple math. So this just breaks down kind of the difference between Silicon Motion's current price, and it's changed a little bit since I posted this, and what the total acquisition price would be. And so you add basically Silicon Motion shareholders would get paid the MaxLinear share conversion, about $14. The cash per share. Essentially, there's a 64% difference between Silicon Motion's current price and the price if the acquisition went through. Now, the deal is expected to go through if it applied to the normal filing duration, or basically what precedents have done, it would be around August. So you're looking at potentially 60% in 5 months if the deal closes. Obviously, there's some skepticism around whether or not that would happen, but I think that should lay some context around what the actual offer is.
Right. And before we get to potential issues, I'll just mention here really quick why MaxLinear wants Silicon Motion in the first place. So MaxLinear is basically an communications infrastructure chip designer. They do a lot of work for internet service providers. They have Wi-Fi chips. They have a new Wi-Fi 7 chip. You may start seeing new routers coming out here in the next year or two where you can upgrade maybe an old internet access point that you have to a higher speed Wi-Fi 7. MaxLinear has some top circuitry for that. But they compete against some pretty big heavyweights in the industry. Broadcom, another company called Marvell Technology. And these guys are way, way bigger than MaxLinear. So if they acquired Silicon Motion, they'd get some diversification in their portfolio. They'd also have a larger scale, which is really important. I think it was in November, their CFO was at an investor conference and said, they did about $1.1 billion in sales last year. Silicon Motion only did like $940 million. So combined, they basically double in size. And what that enables them to do is to go to a company like Taiwan Semiconductor Manufacturing, who makes a lot of their wafers. They get turned into chips, and say, hey, we're now double the size, reduce our pricing per wafer. So you basically get more efficient with the bigger scale. So that's basically MaxLinear's value proposition to shareholders. Yes, you get the cash, out, a couple shares of MaxLinear, and potentially a much more valuable business as they can kind of compete better with some of the heavyweights in the industry going forward. That said, what's up with the price disconnect, Ryan? Because usually when there's an offer like this on the table, the price for Silicon Motion should be trading much closer to the offer price than it is. A 70%, almost over 60% premium is a lot.
Yeah, definitely. And I think you raised an important point there with distinguishing the two different businesses, because they don't really, from what I've seen, they don't really compete across any specific markets right now, MaxLinear and Silicon Motion. So there's less likelihood that people say this is, or regulators look at this and say it's anti-competitive or it's like consolidating competitors in a certain industry. So I don't think that's at risk here. Basically, yeah, just looking at the price, people don't think it'll go through, or they are worried that if it doesn't go through, Silicon Motion's in a different position than they were when the acquisition was kind of announced. There's been obviously a little bit of a demand pullback. I think revenue in the most recent quarter was down more than 20% relative to the same quarter last year. And there was also a little bit of a buildup of inventory, so cash flow has been down. And so I think there's sort of a two-pronged concern there, which is A, the deal doesn't go through, but B, if the deal doesn't go through, Silicon Motion will be valued very differently. And so I think that's a fair concern, but I wouldn't necessarily put the probability of the deal being approved at zero. I think there is a chance that it happens. Obviously, U.S. buying a Taiwanese fabless semiconductor company doesn't screen well in the context of all the political stuff that's been going on. But it is worth noting that there have been a number of semiconductor acquisitions that have occurred since 2019 that are actually all bigger than Silicon Motion, at least on a price tag basis, all bigger. So I'll go through some of them, but Cisco bought Acacia, and I'm sorry if I'm pronouncing any of these wrong. SK Hynix bought part of Intel. Global Wafers bought Siltronic. AMD bought Xilinx. NVIDIA bought Mellanox. Infineon bought Cypress Semi. All those were bigger deals, all required SAMR approval. And basically what happened every time, they went through the standard regulatory approval process, and in most cases, there was one scenario where they had to divest, a certain company had to divest an asset for anti-competitive reasons, I believe. But basically they got conditional approval, which was basically China saying, yes, you can do this, but you have to continue to give fair treatment to all Chinese companies, basically just a number of remedies if the deal, or contingencies to let the deal proceed. And so I think it's fair to look at those and say, well, China's regulatory body they're not just vetoing deals out of spite, even though these tensions have been going on for a while. They've been fairly pragmatic about looking at them, it seems like. So, and to be clear, no one really knows what the Chinese regulatory body is thinking at a certain time. But I found this quote from another sort of an anonymous writer to be kind of interesting, and I resonate with it. He says, China is likely to act in its own self-interest. By stopping all deals, either by denying them or just dragging the approval out indefinitely until the deal collapses, it sends the message to U.S. companies that doing business with Chinese companies, especially in the semiconductor space, may make your own company unsellable. From my perspective, this is the opposite of what China wants. They are trying to close the technology gap and reduce reliance on U.S. semiconductor firms, cutting off access to the products of those firms if they decide dealing with China just isn't worth it, makes closing the gap much more difficult. I think that's a fairly reasonable way to think here. And so at the bare minimum, given their recent conditional approvals and the idea that they should act in their own best interest, it at least seems like a non-zero chance that the deal would go through. I already kind of gave the timeline on when this would happen, but let me talk through. I'll share my screen again to show essentially what the business would look like if the deal broke. So this is a little bit of just rough math, but based on the current price, the market cap would be just over $2 billion for Silicon Motion. They've got some cash on the balance sheet. They run debt free. And then if the deal broke, they'd also receive, Now, there may be some timing issues, but it looks like they'd receive a $160 million termination fee from MaxLinear if it happened. And keep in mind, they've had to essentially stop buying back shares, stop giving their dividend while this deal's kind of in limbo because they don't want any big changes to the business, that kind of thing. MaxLinear doesn't. And so the enterprise value would be roughly $1.8 billion. Now, the numbers, their earnings numbers have fluctuated a lot in the most recent year, but basically on a net income basis, they're earning $173 million over the last 12 months. So the enterprise value, if the deal broke on trailing earnings based on the current price, would be roughly 10 times earnings. That gives them a lot of flexibility to return capital to shareholders and make it really valuable or accretive for the business or for shareholders because likelihood is if it didn't go through, the stock would drop. And so I kind of laid something out here too. If the stock dropped by 10%, it would trade at an EV to earnings of 9 times. If it dropped by 25%, it would trade at an EV to earnings of 7 times. Keep in mind, they have a good amount of cash. And so this management team has returned cash to shareholders before, and I assume they would basically resume doing that if the deal broke, and they would be able to do it at much higher levels. So they could either do sort of a special dividend or big repurchases of the stock, which I think kind of limits the downside. So I guess that's my thinking around the I guess the spread and the offer price and what obviously it's hard, nothing's risk free, but I think there is some downside protection there.
I agree. So maybe just for a little added clarification, I sort of posited a number of months back that the deal, at the very least, the market is expecting the deal not to go through because Silicon Motion is based in Taiwan. MaxLinear is based in California. And China has made some obvious overtures about wanting Taiwan back. So potentially their regulatory body would nix the deal because they don't want to see a Taiwanese company leave. And I should say a fairly advanced chip designer in Silicon Motion leave Taiwan back to the US where there could be some sanctions placed on it. That being said, what you just laid out there, Ryan, this is what swayed me, and I started buying the stock. It's an attractively priced business. It is in a pretty severe downturn right now because it's correlated to the memory market, and memory is like the most cyclical type of chip out there. It's a commodity business, or commodity product, I should say. So that being said, even in a pretty severe downturn, attractively priced, and then the merger opportunity is 60%, possibly 60% plus upside from this point, would just be a nice little bonus if it happens. And if it doesn't, well, worst case scenario, you've got a tiny little small cap chip stock that's going to resume growing at some point once this downturn kind of clears out.
Yeah, I think there's now I imagine a lot of the investors that are now involved with Silicon Motion are probably more on the like merger arb side of things as opposed to the long-term shareholders. But if you look out at it over the last decade or so, this is a business that, well, for one, it's kind of in sort of and correct me if I'm wrong, Nick, because I think this is more of your domain, but it's in sort of secular growth that the industry. And then on top of it, they have really eaten market share among the NAND flash controller market. So right. There's some structural growth inside of kind of a growing industry. So even though there's been this sort of short-term downturn, I think it is a solid business that constantly generates positive cash flow. So it's not necessarily, that's why I think if you're willing to hold this past a merger break, it's still there's a lot of margin of safety there in that, or there's maybe some consolation in knowing that this is still a good business. And it's not just, they're not just buying some crummy company that'll be worth nothing if the deal breaks. So I guess, yeah, that reading more about the business and understanding how they've grown within their industry over the last kind of 10 years is kind of giving me a vote of confidence as well.
Yeah, I think you're right in thinking that memory is a secular growth trend, but a big knock against memory, let's say like Micron as an example, it is the most volatile chip stock you can possibly find. And during these industry down cycles like we're in, the company loses cash. It operates in the negative because their manufacturing lines are not operating at an efficient level. Silicon Motion kind of skirts that because they're fabless. They don't manufacture anything themselves. So like you said, even in a nasty downturn, still cash flow positive. And so if you like memory chip stocks and think it's going to grow from things like AI and increasing content from the automotive industry and eventually data centers, they don't have a big share of the data center market at the moment, but I think they have their eye on that. Yeah, I think you're absolutely right, Ryan. This is, you could own worse merger arbitrage stocks than this one for certain.
Yeah, you could, even if you just think of the 60% plus return over 5 months, which is very attractive, as just a cherry on top. I think maybe that's the approach to go with here, because you got to be comfortable. I wouldn't, as far as like regulatory approval goes, this is more on the side of like could easily not happen as opposed to a lot of other deals. So you really got to be comfortable, I think, owning Silicon Motion, the business, assuming the deal doesn't go through. And from everything I've kind of looked at for the company, it seems well run. They seem to care a lot about minority shareholders as well. With their historically, they've returned a lot of cash to them, so that's another positive for me. Yeah, I think kind of an asymmetric bet here. If the deal goes through, I guess you could call it 60% cherry on top.
I like that. I think we should end it on that. Silicon Motion, if it gets acquired, it's a cherry on top. Everyone, Ryan Henderson, again, check him out again on Chit Chat Money. The podcast is on Spotify, on Apple, or wherever you get your podcast. And Ryan, thanks again for joining me for this one.
Yeah, thanks, Nick. This was fun.